Good morning, everybody. It's Tuesday, December 19th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop those in the comment section. You can also reach us at info@agyield.com, and we'd be more than happy to address your questions or take your comments. Real quick here, overnight markets had March corn down 1 3/4 at $4.75 1/4. January soybeans were down 8 3/4 at $13.18 1/4, and March Chicago wheat was down 4 3/4 at $6.12 1/4. I had an export sales announcement here this morning of 132,000 soybeans to unknown, and that was for 23. Really, on the news wires this morning, the common theme really was logistics. Looking at a Union Pacific closure, a rail closure down in Mexico, and then also continuing aggressions in the Red Sea. The Houthi attacks were, basically, really targeted Iranian-backed vessels to start, and they've now become more commercially based to the point of four of the 5 largest container shipping companies have stopped or changed their routes in the Red Sea. And so wanted to visit with you guys this morning about what that means in some of the energy sectors. And for that, we will shoot it over to Dustin Johnson.
Yeah, thanks, Dan. Well, if you haven't been watching energies, we've had a pretty good sized drop since harvest. So crude oil was flirting with, closer to $90 a barrel. And, we got all the way down to, sub $70 a barrel here recently. This disruption in the Red Sea causing, I think about 12% of goods flow through that, global goods flow through that region. So having to go up and around is adding quite a bit of time and cost and disrupting, global trade. So this goes into a lot of things right now. We're obviously still trying to combat inflation coming out of the COVID timeframe, and to see disruptions, and just not only from what it means for the energy sector, but for potential inflation, is something everyone's watching, of course, if this is going to go on for an extended period of time. But crude oil has rallied over $5 since this has really kind of picked up, bouncing off that low. We're still quite a bit lower than the 50 and 100-day moving averages you can see here in red and blue. But that's more of probably a positive thing for the short run, if we can get another uptick in energies. But any sort of disruption to global trade ultimately could be a negative thing. Actually, I've got a couple other charts here. One of them is in the rate expectations. So this is March 24 SOFR rate expectation. So
maybe take us through what that means there, Dustin.
Sure. Yeah, absolutely. So basically, the SOFR market's projecting the target rate around 5.06 for the 3-month SOFR. That's coming up from like the 100-day moving average for that expectation would be 5.26. So what we're seeing here is a private market starting to forecast some rate cuts going into next year, and probably just from hearing the news or hearing the most recent Fed FOMC outcome is that they're starting to project 3 rate cuts for next year. The market's projecting even more. So if the turn of the tide on rate hikes is starting to happen, that's going to be a very positive thing for global trade, for commodity prices. We've seen a lot of commodity prices turn down recently from higher pressure, higher interest rates. All of that goes into generally a lower lead month commodity price if it's restrictive. But if I overlay in this chart, Dan, now same exact chart now in black versus the dollar index, you can see how that translates to the currency markets, right? Compared to the basket of currencies that make up the dollar index, these big days where you see downward, cuts on the expectation that rates will start to fall going into spring of 24, you're also seeing major drops in the US dollar index. That's very supportive for things like soybeans, supportive for crude oil, anything that, especially export markets like soybeans, will see a positive impact, in my opinion, from further rate cut expectations. So when you get things like this, what's happening in the Red Sea, if you start to see inflation, global trade restrictions causing inflation again, that's going to make the Fed's job a lot harder to continue to cut. So it's just going to be something we got to continue to watch. So it's a double-edged sword, of course. In the short run, higher energy prices, usually a good thing for grains. In the long run, though, if this leads to more energy inflation, right when the Fed's trying to combat inflation, it might be it might not actually help our currency situation.
So is that maybe is not that soft landing that they're trying to call for or predict there?
Yeah, they're definitely walking the tightrope, and so far, by all accounts, it looks like they've been, fairly successful. The stock market's back at all-time highs. You've got inflation. While it's still inflated, it's the rate is coming down. So far, it's been a very positive thing, but we're still not out of the woods yet. So that they made this mistake in the back in the pre-Volcker timeframe, where they end up having to go back to rate hikes again to combat it, because they didn't do enough. So I think that's what everybody's watching right now, is to see, if inflation starts to uptick again for what monetary reasons, or maybe even just trade disruption reasons, that would be probably a negative thing.
Yeah, and just we'll touch on it briefly, because I think I don't think there's still a lot of news to digest on this front, but I was looking at just some stuff on the wires this morning, and this closure for the Union Pacific down in Mexico, they implemented actually yesterday at 8:00 in the morning. Roughly 45% of that rail movement of goods, whether it be grain or cars or industrial products, rolls through that area. Potential effect on spreads, things of that nature. And this by no means is saying that this is going to blow up into a huge deal, but I think that's something worth noting here this morning.
Yeah. So, a lot of, Mexico's obviously a huge buyer of corn. Anything that disrupts that flow is going to be a negative thing in the short run. We need to continue to chew through large corn supplies. And by all accounts, we have had a lot of disruptive things for logistics for our corn situation this year, mainly the Mississippi River. Now we've got some rail issues going into Mexico. Yet to be determined. I think that probably came into some of yesterday's weakness for corn, but we have since seen coming back up above the low watermark for Memphis, right? So we're back above -5 feet at the moment, projected to go back down again. We also have the Panama Canal, which as we talked about this in recent videos. Low water levels there have led to a slower path, higher expense. They have started to ease up on that a little bit, so now they're allowing 24 vessels to go through the system at once instead of 22, due to better than expected rains recently. So
it's a small victory, I suppose.
Yeah, absolutely. And I think obviously the worst thing we can have is have the actual logistics disrupt grain prices, because we can't get it to where the usage centers are. So,
yeah, that's really good. Let's pivot here just for a second here. Johnny, I know we were talking earlier this morning. What are you seeing in Brazil weather here? I know that there was some systems moving through kind of the central part of the region this morning, but what do you got for what they're saying this morning on weather?
Thanks, Dan. Yeah, from what I saw this morning from 2 weather services and maps that I looked at, increasing shower and storm coverage late this week into the weekend. So we'll see if anything comes out of that, but they are looking for increasing rain over the next week. So,
well, that'd be huge. I mean, you think some of that weakness, I'll throw Dustin, maybe just some of that weakness we're seeing out forward has to do with, kind of taking drought off the picture, out of the picture here a little bit?
Yeah, I mean, December and January are critical time frames. Like we've all seen, dryness to start and then good rains to finish, and in the U.S. at least. So yeah, really good rain expectations coming from what we've seen this morning. So I do think that that's partly why beans have managed to find some resistance here. Also, just in the short run, yesterday's rally, corresponded with wheat weakness. Today's break is corresponding with wheat strength. So there's still that inverse connection there between, I think, how the funds are probably treating that pair. But we ran right up to exactly the 50-day moving average in the Jan contract yesterday and overnight, and then backed off from that. So if you can get past some of these major moving averages, perhaps you see the funds change their tune a little bit and stop liquidating the bean sector.
That's good stuff. Got a couple of minutes here. Ryland, what do we got on the meats? I had a green screen for a while yesterday. How did we finish, and what are we looking like here this morning on early calls?
Yeah, thanks, Dan. We had new highs for the move in both places, cattle, hogs, feeders. So, getting a little bit of that Santa Claus rally here. Got a positive seasonal kind of helping support everything right now. Just you get a little bit more pork demand, a little bit more meat demand in general, for the most part. So I think that's what the market's really been. We are seeing some of the open interest start to show that we are adding some new length here in the cattle market, and I wouldn't be surprised to see a decent chunk of short covering in the feeders just because the managed money's been leaning that way. And so it just seems like we're just waiting for cash to trade. On the live side, I haven't seen anything yet. And as far as just the way the market's acting right now, it looks like we're kind of rallying into these reports. Hopefully we can see some follow through here, but I think that we're going to see some cautious trade. If we don't see cash cattle trade up or at least steady this week, feels like this rally is going to peter out pretty fast. We could level off. So just waiting to see the data, I think, and see if the direction can, we can bounce just a little bit more here in the live side, get a little bit more aggressive on hedges, and same thing in hogs.
Okay, and to be clear, the reports that we referenced yesterday, Rye, are going to be released Friday, and that's at 2:00 Central,
2:00.
isn't it?
Yeah, 2:00 for both of them. So markets will be closed. We got all weekend and all Christmas to stew about it.
Oh, exciting.
Yeah.
And then you'll release some estimates on that in some of the evening commentaries. Have you seen some of those estimates come out yet?
I haven't seen the consensus estimates yet, so I'm just waiting to put those out. Usually they're out by kind of late today, if not Wednesday.
Okay, perfect. Then we'll keep an eye on that, and we'll get to those estimates and kind of see where everybody's leaning ahead of that report. Fellas, any parting shots here as we go in? Got a couple minutes here to the open. Anything else on your mind as we?
Yeah, Dan, I was going to bring up a little bit about basis. Seeing some really sizable basis pushes, through the holidays here, especially for any of our growers who have, rolled these premium contracts with that sizable carry, on top if we can get a pretty sizable basis push. Especially on the beans, if we roll to jam, we'll have to decide on something on the 27th if we want to set it. So I wouldn't mind having you, if anyone has those contracts, give us a call, one of our consultants. And then even on the corn side of things too, if you rolled the March also at a sizable carry, you can deliver if you have room for more income for 23, you might want to take advantage of it.
Oh, that's good stuff, Brian. And are you seeing demographically where are some of those real good pushes coming from?
Northeast Iowa is looking, positive basis. I think you're going to probably find them everywhere, Dan, especially no one really wanting to deliver during the holidays. Sure. But like I said, if you can use some income for 23, you might take advantage of those premium contracts. And plus the weather's been really favorable to be moving grain. So I'd take advantage of it. I'm just worried that basis might, fall off after the new year.
Yeah, well, that's a really good point, Brian. And like Brian mentioned, as always, please, give your consultant a call there, and they can, run through your area and talk through a basis and see what that looks like. So, streaming live, folks, on X, Facebook Live, and YouTube. Jack did a nice job on the comment section yesterday. If you haven't looked at that video, it talks about how to leave comments and subscribe to the channel, which was really well done. So as always, we appreciate everybody tuning in this morning. We'll be back same time, same place tomorrow morning, 8:15 Central Time. And we hope everybody has a great day. Thanks so much.
Thanks,
Thank
Dan.
you.